Colin Coleman, thank you very much for making some time. I want to talk a bit about some of the intra-African deal flow that you spoke about, but first, we're at a very historic point in your own country. 20 years of freedom of democracy, and I know that's something you were both personally involved in and also something that you've kind of looked at what's happened in those 20 years. It's a huge story to tell, but briefly, what can one say about kind of the achievements of that period in South Africa?
Well, the headlines as Jacob Zuma is inaugurated as the fifth administration since democracy in South Africa after 20 years is that South Africa has lifted the poor significantly through social welfare grants. It has created a much larger middle class. About 10 million Africans have risen through the ranks of the middle class from the poor in the last decade. They have completely changed the fiscal and monetary balances for the better, and that means that we are now no longer spending 30% of our budget on defense and interest on debt. We're now spending it 60% on human capital development, and the size of the budget is tripled in dollarized terms. So a much better picture. Against that, the challenges of unemployment and inequality loom large in South Africa. We have 15 million people working, 7.5 million people not. That's an unemployment on a broad definition rate of 36%, and we have persistent inequality. The bottom line is the poor have got less poor, but at a slower rate than the wealthy have got more wealthy.
So the inequality has grown?
Has grown,
yeah.
In fact.
And is that, are those issues pretty consistent across the country, or does one see different regions with different
It's a national
issues?
pattern.
Right.
It's a national pattern. And to counter that, we have to be much better at the quality of spending. So I said the quantity has improved significantly in the distribution of the expenditure, but the quality of spend, particularly in health and education, and our persistent labor issues in South Africa are retarding productivity and growth. So what we need is a much better growth rate. We think about 5% going forward over the next 20 in order to again take the economy to $1 trillion sized economy, halve unemployment and double GDP per capita.
You mentioned labor issues. When the ANC first came to power, part of the strength was the close ties between the party and labor, and that would enable them to get some concessions. With growth and some improved economic results, have the tensions reemerged between the party and the unions, or what's the situation?
Well, the ANC alliance with COSATU, which is the main trade union, and the South African Communist Party persists, but there are significant tensions within the alliance. It has managed to sustain the alliance, but really what we need President Zuma to use his incumbency now to turn the corner on labor relations. Interestingly, COSATU, the main trade union with over 2.2 million members, is now 40% of its members are civil servants. So it's actually not just a political question, it's also an employer-employee relationship that the government has with labor, and they are in a prime position to turn the tide.
Now, let's turn our eyes to some of the bigger Pan-African issues that we're discussing here. You talked about the growth of intra-African investment, particularly in three sectors: financial institutions, infrastructure, telecommunications. What are some of the particularly interesting deals that you've seen happening in Africa recently?
Well, some of the ones that we've talked about that are public are the consolidation in the tower space. For example, Goldman Sachs invested as a principal in a company called IHS, which has made significant headway. But what we're seeing in the private equity world is very interesting. We're seeing a lot of companies that they've invested in, they're now exiting and making new investments. And as they do that, there's a much greater deal flow in those sectors you mentioned.
And are those exits for public listings? Are they trade sales? Is there a pattern you're seeing there?
I think in the main it's trade sales. But there will be some capital raises associated with it, which may impact listings. But the reason is simple, that outside of South Africa, the equity capital markets, and I talked about this, are very undeveloped. And in Africa, the next biggest after South Africa is 1/10 South Africa's size and 1/100 of the liquidity. of the Johannesburg Stock Exchange. And so the nature of these deals are more trade sales strategic partners.
One of your banking colleagues who was on that panel talked about working to convince South Africans that there was life north of the Limpopo. Has that barrier been crossed as far as you're concerned?
This is pushing at an open door. It's certainly the case. When I started my career at Goldman Sachs 14 years ago, we really had to push hard on that. But now with Africa, clearly the turbocharge of economic growth at 5.5% plus going to 2030, and South Africa growing at the moment around 2%, perhaps 3% in the medium term, but really needing to get to 5%. Africa offers this opportunity for superior growth relative to the South African market.
So I know sort of 10, 15 years ago, some of the major South African corporates invested in Europe, and that's where they were looking. You think of Old Mutual or South African breweries. Are those big corporates now concentrating on Africa, or are they looking wherever there's opportunity?
Well, Africa is certainly one of the priorities, if not the priority in each case that you've mentioned, and others. Africa is certainly, you look at the ShopRites, the MTNs, the Standard Banks, the Tiger brands, very much forefront of mind. And for example, Standard Bank has sold many of its non-African businesses in order to raise capital to make additional forays into Africa, and that's their own backyard.
Great. Thank you very much for your time, Colin.
Pleasure.